There is a major crisis going on right now today that you need to be aware of. This affects every person, all corporations, emerging markets, and developed economies. The first thing I want to look at is the consumer sentiment. I want to show you what's happening right now on a deep level. The second thing is the major debt escalation that is taking place right before our very eyes. And the third thing is the next level crisis. I will break this down so simply for you. Stick with me. Let's begin. And so we begin right here. 2022 responses for the question, what's the most important problem in the US right now? Overwhelmingly, the survey suggests rising prices and inflation. If you look at other surveys, they say the same thing. Even when we look at this in depth and try to analyze why this has been happening, which I'll do in this video, it starts to really ring a bell from previous cycles. The same thing happens over and over again. We have new information that has come out as of this recording today. Wholesale prices rose 0.3% in November. That's more than expected. So we had thought maybe inflation was going to go away and it would be down, down, down from here. But this is the wholesale inflation level. What does that mean? Well, for instance, if you're talking about steel, if you're talking about lumber, if you're talking about raw materials, well, these are the things that you may not be purchasing directly, but maybe a company buys that and then they manufacture a product and then sell it to a customer. That's the wholesale prices, if you want to think about it in that way. And right now, that has continued to go up at a time in which we're being told we might have to increase interest rates more and more and more. And when you do that, you increase the burden on the individual, on the corporation, on the nation, and beyond. That's what we'll get into here. Price of Christmas trees rising as inflation hits the home. I'm looking at news all over the place. In the UK, the cost of living crisis forces families to scale back Christmas. We're seeing this all over the place right now at this time today. It shows us how shocking this can really be for so many people. I don't think enough people understand the real situation that's going on because maybe they're employed and maybe they just don't feel it at this time, but understand what's going on behind the scenes. Let's look further into it. Germans should turn down heating to save gas, says regulator. That's right. Don't turn your heat on all the way. We really need to save energy right now. You should be forced to wear an extra sweater or get under the blankets, triple blankets, because somebody in World Economic Forum suggests that you have to. That's right. And then we have this. It's just more reports that I wanted to show you. Essentially, almost all the signs are pointing up when you look at core inflation, when you look at all these different measures of inflation in Europe. Right now, they're heading higher. And then on the right side, you can compare different indicators, whether it's the hourly labor cost, whether it's wages, all these different things, but essentially they have moved up from before. So the expenses that businesses are incurring have risen, and then that gets passed down to the customer. That's you. That's you right now. I want to talk about that all in a second, but this is the big one, what BlackRock had to say. Now, this is an interesting report, and if you want to see the whole thing, you can go down in the description under the sources. But you've got to understand right here, taming inflation would take a deep recession. That is a quote from this report from BlackRock, and my goodness, you know how interconnected BlackRock is, not just with the others in the financial system, but of course the government as well. Large drop in GDP is needed to close the gap between demand and supply in 2023. They are talking about what is needed, and that's the thing. Are we going to experience higher levels of inflation, or are we actually going to tame it? Is it going to be the case when we have been dealing with this for so long? Let me break this down for you right here. And by the way, you've got to check out what BlackRock had to say. Very important stuff. High inflation can lead to an increase in the cost of goods and services, reducing the purchasing power of consumers and businesses, leading to a contraction in the economy. Additionally, high inflation can also lead to an increase in interest rates, further reducing consumer spending and business investment. High interest rates can lead to an increase in borrowing costs, making it more difficult for businesses and consumers to finance their purchases. This can lead to a decrease in consumption and investment, resulting in a decrease in economic growth. Additionally, high interest rates can also lead to an increase in the exchange rate of the currency, reducing the competitiveness of the country's exports. An aging workforce can lead to a decrease in the supply of labor, resulting in increased labor costs and a decrease in economic growth. Also, an aging workforce can lead to an increase in the dependency ratio, as older workers are more likely to rely on government benefits and services, thus increasing the burden on public finances. Population trends can have a significant impact on the economy. A decline in population can lead to a decrease in the supply of labor and a reduction in economic growth. An aging population can lead to an increase in the dependency ratio, putting a strain on public finances. China's growing influence has been felt in many sectors of the global economy, ranging from manufacturing to finance. China's increased presence in the global economy can lead to an increased competition in global markets, resulting in lower prices for goods and services and a decrease in economic growth. China's increased presence in the global economy can lead to an increase in the exchange rate of the currency, reducing the competitiveness of the country's exports. Earnings. Corporate earnings can have a significant impact on the economy. Additionally, a decrease in corporate earnings can lead to a decrease in consumer spending, resulting in further contraction of the economy. All of this taking place right now, right before our very eyes. I trying to break it all down for you to make sense of it. That's what we are dealing with today. But this right here, this is you. This is everybody, where the real wages have been on the decline. I think it's 19 months in a row right now. When you factor in inflation, yes, you might have gotten a raise. Yes, we may be A-okay in some categories, but in reality, because of inflation, it's putting a burden on our lives. And this is basically just showing us that we've got a lot of credit card debt. And unfortunately, the personal savings rate as a percentage of the disposable personal income has declined to levels we haven't seen, this goes all the way back. 2006 maybe, it's hard to tell on the chart here, but it's just showing us that rapidly the savings are depleting for people and credit card usage is skyrocketing. And of course, along with that is also the interest rates that are on these cards, whether it is the average card, which I'll show you here, and basically the store credit cards, maybe the Sears credit card or what have you. And these have risen. It depends on the store and all these things. Don't be focused on the numbers, but the whole general trend is that they have been rising. That puts an additional burden on people, and I want to break that down for you right here and now. When people are in too much debt, it can negatively impact the economy by reducing their spending power. This can lead to a decrease in demand for goods and services, which can lead to fewer jobs. Corporate profits can also be impacted if they depend on consumer spending. A decrease in consumer spending can lead to a decreased revenue and profit for corporations. When corporate profits decline significantly, it can have a ripple effect across the economy. Companies may start to lay off workers or cut back on hiring, leading to a decrease in employment and wages. This, in turn, can lead to reduced consumer spending, further weakening the economy. The stock market may also suffer as investors become wary of companies that are not generating enough profits. A drop in corporate profits can lead to drops in stock prices, which can further reduce investor confidence and depress the market. As we see so much of today, if a person is carrying a large balance on their credit card, it may suggest that they're having difficulty managing their finances and paying off their debts. This could be a sign of financial stress. In some cases, carrying a large balance on a credit card can also lead to high interest charges, which can make the debt even more difficult to repay. It's important for people to carefully manage their credit card use and avoid carrying large balances if possible. That's what we need to understand of today. The issue is not just what's going on with people, but of course, nations and corporations as well. The ECB warns that an EU gas price cap risks financial stability. So I read through what they had to say, and basically they're trying to cap the prices to make it easier, less of a burden on people. I get that. The only issue is they don't know what they're doing, and anytime you ever try this, it's like a game of whack-a-mole because you fix one problem and you create another. So key. Did you see this, by the way? Huge news out of the UK, and there will be a financial crisis in the UK because of this problem. So if you haven't seen it anywhere else, let me know in the comments below. You're getting it here first if that's the case. UK announces major overhaul of its financial sector in an attempt to spur growth. Uh-oh, what do we got? Well, you could see here, out of the 30 measures that they've been changing here, this includes a relaxation of the rule that requires banks to separate their retail operations from their investment arms. That's right. Hey, well, you put that in place after the financial crisis to make sure there's not a problem, but guess what? That's slowing down growth. So we're going to make it all happen yet again. Main Street says America has dodged a recession so far, but economic downturn is coming. We're seeing these reports constantly, right? What about this one? The Fed may wreck one of the greatest booms in history of Main Street America. Why is this the case? Because of interest rates. And on that interest, we have too much debt. So that's what I'm trying to get to. And who has a lot of debt right now? Africa. Africa is heading rapidly towards a debt crisis. They've got so much, and yet the cost of trying to actually deal with it has risen. Sub-Saharan Africa debt service costs jumped 50% in 7 years. That's the chart associated with it. I think it is truly, in my opinion, truly extreme to see this today. And the only way this is going to be resolved, at least what they call resolved, is if interest rates decline. So I'm interested to see where this goes, because right now there's just so much that cannot be resolved until that eventual pivot that everybody's been waiting for. You, the individual, you need to take care of yourself, watch your balances, your credit cards, your high interest rates, use the low interest rate debt if at all possible. And of course, if you've got corporations that you're invested in, you better watch where they've got their funds and what they're doing. Their actions right now is a pivotal time in history. I hope you found this informative. If you did, hit that subscribe button down below every single day, bringing you the latest and greatest and trying to tie it all together. Hit that subscribe. I'll see you tomorrow. Take care.